Hello children, for online classes on Skype and Hangout, call 8420985958. Today we learn the fundamentals of accounting. To understand the fundamental of accounting, we should first understand business and its transactions. By the word business, we mean recurring production or trading of goods and services. There are enormous amount of transaction in a business. The owner or owners of the business cannot remember all those enormous transactions. So they need a proper system or format to record these transactions. This recording is called accounting. To get the idea of how the business is running or what is the position of the business in the market or among its competitors. What are the fair values of its assets and liabilities? What are the expenses and income of the business? For understanding all these, we should take the help of accounting to record the enormous amount of transaction which is happening in a business. So we can say accounting is also needed to understand the business and have a fair control over it. Transaction means any events, happenings, or occurring in the business which can be valued in terms of money. Which, for example, buying of assets, buying of raw materials. Raw materials means with which we made the goods, which with which we produce. The goods with which we produce is called the raw material. Selling of finished goods, selling of fully done complete goods are called selling of finished goods. Giving salary to its employees, giving wages to its labor, paying bills and other expenses, paying to the creditors, receiving from the debtors to whom we are selling goods in credit, paying taxes to the government, investing in the business as capital, withdrawing money from the business for personal expenses. All these are the example of transactions in the business. There are innumerable of this transaction in a business, and we should record this transaction very systematically and correctly to understand the business and its position. Each transaction analyzed into two parts, one coming in, another going out. Suppose we buy a furniture. The furniture is coming in and the cash is going out. So these transactions all have two parts, some coming in the business, that is some monetary value coming in the business, and some are going out. These transactions should be recorded, classified, and summarized correctly and very carefully to understand or to get a fair view of the business. Recording of these transactions chronologically, that is date wise as it occurred, is called journal. Each record of journal is called an entry. These entries should be passed from the point of view of the business and not from the point of view from its creditors, debtors, or investors. Because we all know business has its own identity and entity. And from the point of view of the business, we should pass the transaction. If anything is coming in the business, we should passed accordingly. If any monetary value of things is going out of the business, we should pass these entries accordingly. And we should all know that owners of business and business are two different identities. Journal are the first book of entry, so it's called the book of original entry. Therefore, journal is a tool of analyzing and describing various transactions of business. Each transactions can be analyzed into a debit and credit aspect. And children, this debit and credit is the basis and fundamental thing of accounting. If you don't understand the debit, what should be debited and what should be credited properly, you cannot understand accounting. So We should take each and every transaction, analyze into a debit aspect and a credit aspect, and these debit and credit should be opposite and equal in nature. So, since there are two aspects of the business, we call it a double entry system. This double entry system has two methods. One is traditional method, another is the modern method. Traditional method is the British way of accounting and modern method is the American way of accounting. Traditional method has three accounts. Personal accounts. These accounts deals with transactions like customers, suppliers, money lenders, banks and owners. Suppose we are receiving something from the debtor, we should we are receiving something from the debtor, then we should debit it. Suppose we are giving something to the creditors or the creditors are increasing, then we should credit it. So one should debit the accounts when it receives something from the debtor, and one should credit the account when we are giving something to the creditor. Again, these should be valued in monetary terms. So we can say one should debit the account of a person who receives something from us, and one should credit the account of the person whom we have to give something. Okay. Then comes the real account. This account deals with assets and properties such as land, building, machinery, patent, cash, inventory, etc. Patent means any license that should be used for manufacturing aspect and should be issued by the government. Then inventory means any stock of raw material, any stock of finished goods, any stock of half done goods which are called WIP or work in progress. Investment means when the business invests anything into other business. So when the asset increases, then we should debit it. When the asset decreases, we should credit it. Suppose we buy any asset, if furniture is bought for cash, then we should debit the furniture, and when cash is going out of the business, we should credit the cash. So we can say one should debit the account of asset or property which comes into the business or addition to any asset, or we are buying any extra furniture, we should debit it and credit the amount which goes out of the business. When we are buying furniture and cash is going out of the business, we should credit cash. Nominal accounts. These accounts for income and expenses, gains and losses. It deals with the income and expenses which are regular in nature, which are due to which occurs due to the regular functioning of the business or the regular operations like buying and selling of the business. Under these regular income and expenses, they are in profit or loss of the business, expenses of the business, commission of the business, sales of the business, purchase of the business. Any income and expenses which are regular in nature and occurring regularly will come under this nominal account. So we should debit all expenses and losses and credit all incomes and gains. Suppose we are selling a furniture. If there is a profit by selling the furniture, we should credit the profit. If there is loss by selling the furniture, we should debit the loss. So at a glance, we can say under personal account, we should debit all the receivers, we should credit all the givers. Under real account, we should say we should debit what comes in and we should credit what goes out. We should debit what comes in or when the asset increases, and we should credit when any asset is going out or when the asset decreases or when we are selling the assets. Nominal account. Debit all expenses or losses, credit all incomes and gains. Then come the modern method or the American method. There are different types of accounts, 6 different types of accounts. asset account, liability account, capital account, revenue account, expense account, withdrawal account. When the asset increases, we debit it. When the asset decreases, we credit it. When the liabilities decreases, we debit it. When liabilities increases, we credit it. Suppose there is a credit sale. Due to the credit sale, that generates an asset, which is a debtor. When we are selling something in credit, then the debtor occurs. So it's an asset. When debtor is increasing, we should debit it. When debtor is decreasing, that when the debtor is paying money to us and the debtor value is decreasing, then we should credit the debtor account. In case of liabilities, when the liability or the creditor, suppose we are purchasing something, the then the suppose we are purchasing something in credit, then the liabilities is increasing because there is a credit or loan burden on us. So we should credit the liability account when we are paying off the liability, when we are paying off the debt creditor, then we should debit the liability account. Okay, then comes the capital. Capital, what the owner invests in the business. When the owner invests in the business, when the capital increases, we should credit it. When the owner takes out the capital, we should debit it. Or when the capital is decreasing in the business, we should debit it. Revenue. Revenue means any sales or any income of the business in terms of commission, in terms of discount received, in terms of bank interest received, or any sales of the business. If the sales increases or there is an income, we should credit it. If there is a decrease in revenue, we should debit it. Then expenses. Expenses can be electricity bill, expenses can be phone bill, salary. Any regular expenses are the expenses. If the expenses increases in the business, we should debit it. If the expenses decreases in the business, we should debit it. Then comes the withdrawal or the drawing account. When the owner withdraws something from the business, it withdraws its capital or it withdraws a profit for its personal use, it is called the withdrawal account. When the owner withdraws more, then it is debited. When the withdrawal becomes less, then it is credited. For example, we take two journal entries to understand what is a journal entry and how it happens. Suppose cash is invested in the business as capital 1 lakh. There are two aspects. One aspect is the cash, then the other aspect is the capital. The journal entry should be followed as the golden rule: cash account debit to capital account 1 lakh 1 lakh. Now cash is a real account, so it's an asset. So cash is coming in the business, so we should debit it. Capital is a personal account, or rather the capital account in the modern aspect of accounting. So the owner is giving in the money, or liability for the business is increasing because it is taking money from the owner, and the business, since it has a different identity or entity, has the liability to give the money back to the owner. So we should credit it. So the cash is invested in the business. There are two aspects to sum up: cash and capital. Cash is debited, capital is credited. Cash is real account coming in the business, it's an asset, we should debit it. Capital is coming in the business, and we should credit it, since the liability also for the business is increasing. Then suppose furniture brought in. Furniture worth 8,000 brought into the business. Then furniture account debit to cash. Furniture is an asset which is coming in the business. Cash is going out of the business, which is also an asset, and we should credit it. and both the amount should 8,000 and 8,000, because debit and credit should always be equal and opposite in nature. Purchase of good worth 2,000 in cash. So there are two aspects. One is purchase aspect. There is another aspect which is called the cash aspect. Because purchasing of goods, one is expense, which is the purchase, which is nominal in nature, which is a daily expense. Purchase of goods, obviously, purchase means when you're purchasing any goods, to keep in mind to resell again and make a profit. If you are purchasing an asset, it will not come under the purchase account. It will come under the name of the asset. But if you are purchasing any goods for again selling it, reselling it for gaining profit, it should come under purchase account. So purchasing of any goods is an expense, so it is coming under nominal account, which is a very much part of the daily business, and so it should debit it. And cash is a real account and it is asset and it is going out, so it should be credited. So children, these are the basic of journal, and these are the basic of the fundamental of accounting. So if you like my classes, you can take online classes for further information or for further guidance. My online classes you can take on Skype or Hangout and pay through bank account, and for that you can call 8420985958. This is all for today. Me coming with many other videos and to enrich you with the knowledge of accounting. Thank you. Bye bye.